Global stocks and emerging markets are on the back foot this morning, with the JSE also showing concern over load shedding and the greylisting of South Africa by the Financial Action Task Force. Petri Redelinghuys is with Herenya Capital, and he joins us now for the latest market moves. A happy Monday to you. So the JSE is marginally in the green this morning after a tough session last week. The rand is at its lowest, and it has been for a few months. What is weighing down the local currency?
Good afternoon. Thank you for having me. I think there's a number of different things. I think one, we're starting to see sort of international headline indices come under somewhat some pressure, starting to crack a little bit perhaps. The US has been running really hard so far this year. It's been about 2 months of almost straight upward motion on the US equity market, and that's seeming to come under a bit of pressure, as we saw late last week, that inflation is still running somewhat hotter than what is anticipated in the US, which will probably lead to, more interest rate hikes, higher interest rates for longer. It's funny how, I think we've spoken about this before, how the market likes to play chicken with the Fed, and every now and then has to swerve drastically because the Fed will not be budged, right? So we saw that happening again last week. The market is very, very strong. When that inflation number came out, it worked really, really hard to stay, above the 4,000 level on the S&P 500 at least, and eventually it gave way, and we saw the US equity markets come down quite a bit. So that risk-off sentiment obviously spreads across the globe, and we've seen a remarkable move from the US dollar index as well, as the dollar essentially strengthens as people sort of fly to safety, if you will, and they buy US dollars and US treasuries, and that put quite a bit of quite a bit of strength in the dollar, which already put the rand on quite a bit of a back foot, right? You've got a stronger dollar, you've got weaker US equity markets, you've got general risk-off sentiment sort of spreading across the globe. It's already puts us on the back foot. So then we had a number of our own other issues last week as well, most notably Eskom, I suppose, being the biggest one, and a lot of headlines surfacing around, there's a very low probability of total blackout. Now, if you've been following stuff the government's been saying, whenever they say there's a low probability of something happening, it's kind of closer to like a 50-50, at least from my experience. But in any case, I think the one that grabbed the headlines last week was, of course, the greylisting, and that's got a lot of people very worried about the future of South Africa and its attractiveness as an investment, destination, and that itself put further pressure on the rand. We saw quite a strong, and I want to say almost panicked move from the rand after the greylisting news was, released or published. And that move has been sustained until now, 18 rand, 43 to the US dollar, so another 1/5% weaker, and trading at the weakest level it's been in some time.
Yeah, you mentioned the market's not taking too well to the news of South Africa being greylisted. Should we, as ordinary South Africans, is there a need for panic?
Look, there's nothing we can really do about it, except perhaps vote in a different direction, which may take, some time before we see a result. But, at the end of the day, we are on the list with a number of different countries, and some of them, are in better shape than others. But one of the, I suppose, most esteemed members of the grey list is the United Arab Emirates, which, as we know, is one of the richest countries in the world, as well as one of the biggest oil producers, and nobody has any problems doing business with Dubai, even though they are on the grey list. So it is absolutely not a death sentence to us. It just means that, it's an acknowledgement of our current, real situation where we have enormously well thought out laws and structures and processes. We just do not have the enforcement of those laws. And this is essentially in the anti-money laundering space as well, where we have all sorts of agencies set up in place. And unfortunately, these agencies are just understaffed and unable to essentially do the tasks that they are supposed to do. So it is a warning sign for us to pull our socks up. Whether or not it will impact the financial services sector, I very much doubt. I think our regulation is very strict, and our, the contenders in the financial space in South Africa are very strict on how they enforce the rules. So I don't think that it will be too much of an issue for us. It is, however, another black mark on essentially what is a downward spiral for the South African government.
Okay, so retail chain Choppies has released its financial results. How did they fare?
Choppies, I'll be honest with you, I have not really seen their results to be very frank with you. I've not really focused on that too much. The share price hasn't really moved too much today either. So by the looks of things, if I have a quick look now, it does seem as though, well, I had a very, very brief look at it. It does seem as though, they are under a little bit of pressure. Operating margin came down somewhat, profit for the period down as well. So it shows that, well, a number of things. One, this inflation situation is really starting to bite all sectors of the economy. And it's interesting because Liberty 2 Degrees put out something as well, saying that footfall through shopping malls and the like, part of their property portfolio is up quite drastically. However, we can see in the retailer space that headline earnings per share is down somewhat. I think Choppies was down somewhere around 35%, if I'm not mistaken, which is quite a bit, right? I mean, they're under quite a bit of pressure. So it shows that and we also have to remember that Choppies generally tends to play in the lower LSM market. So they're not necessarily the guys, shopping in the massive shopping centers like Liberty, the ones at least that Liberty 2 Degrees owns, right? So on the one side, within Liberty's results, you see that, okay, this recovery that we saw post-COVID, everybody got locked down, everybody got, locked in their homes for quite some time. It's now, fully 2 years later, almost 2.5 years later, and that recovery is starting to come through in our behavior, right? So our normal consumer behavior of going out and doing things, we're starting to recover, and life is quote unquote back to normal. However, by looking at some of the retailer results, something like Choppies, for example, where you see this enormous pressure on HEPS, and it seems as though they just are very much struggling to push higher, inflation prices through to the end consumer. And that is really eating into their margin, and it's starting to affect people's shopping patterns as well, right? So I think it, goes to show that we are in a very economic difficult time, and it is bigger than just ourselves, right? We have a global inflation phenomena that's busy happening because of huge amounts of money that was printed in response to COVID. We're starting to see an enormous amount of inflation, as well as obviously there's the that was a force of inflation as well, and this is starting to really bite. And the economy is slowing down. The consumer is coming under more and more pressure. So on the one side, it's like we've just come out of a recovery from COVID, and we're sort of heading into recession, right? I mean, South Africa, I think, has been in and out of recession for some time now, but that recession is really starting to come on a global scale, and it's starting to be a lot more, broader impact, particularly energy prices that have been quite high. Which obviously has a very strong knock-on effect to all other sectors of the global economy.
Thank you very much to Petri Redelinghuys of Herenya Capital.